pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Mr. Banker, would you do the roll call, please?
Mayor Steen.
Present.
Councilmember Large Anderson.
Present.
Councilmember Enright. King.
Present.
Austin. Jordahl.
Present.
Hagan. Carolyn.
Present.
We have a quorum, Your Honor.
You know, I'm not aware, Tom, but do we need a quorum for this?
You actually have a quorum right now, but we had a discussion earlier that it's not a meeting you actually take any action on, so if for some reason I didn't have a quorum since it's been advertised, I'd still go through with the discussion.
Okay. So I have a bunch of TNTs on here. Why don't you just go ahead? It's your show.
So, first off, this is required by state statute to have a hearing to show the citizens where their tax dollar is going for the payable 2017 year. And I must admit, we have more people here than we've ever had.
Too many.
Which isn't too many, correct. The cover letter that we go through some of the budget issues. The total budget on the first page, $31,252,900 is what is proposed for 2017 based on the actions and direction council has given staff over the last 6 months or so. The page 2 of the cover letter, we maintain an AA2 credit rating for the city of Austin, which allows us to borrow at lower interest costs if we do need debt service. Historically, the last several years, we have not issued debt for most of what we do unless it was for a special project. But again, we maintain that credit rating to allow for such. Our revenues for 2017, majority of the general fund, our main operating, comes from state aid, better known as local government aid. In 2017, we're certified to get just under $8 million, which is used in our general fund to offset our operational costs. Our general fund budget is just under $16 million, $15,923,000. Again, $8 million of that budget, half of it comes from the state of Minnesota. So if the state of Minnesota, for some reason, changes the allocation or the dollars they put into local government aid, that has a severe impact on the city of Austin. In fact, several years ago, they cut $1 million out of us, and we had to change some of our operations. Our tax levy is proposed for 2017 is $5,341,000. That's the dollars we're proposing to spread over the entire city. That represents roughly a 9% increase over the 2016 levy. Historically, 2 to 3% of that is covered by growth. So I'll have a new home, a new business. Your property valuation increases. So historically, 2 to 3% is covered by that new growth. This year, based on the tax statements we've seen, that new growth is probably only in the range of 1.8%. So roughly 7.2 is just a flat increase. The other 1.8 is coming from that growth within the community. On the expenditure side, most of our cost is people cost. In fact, if you took a look at that 9% tax increase, 7% of that is going because of increased costs, whether it's the 3% cost of living increase, council's approved on the 3 contracts we have settled into 17, health insurance contributions, PERA, etc. For 2017, staffing levels are proposed to increase only 0.5%, which is increasing the administrative assistant at the fire department from 20 hours a week to 40 hours a week. Otherwise, there is no additional staffing proposed for 2017. Capital expenditures, one of the other big expenditures we have is for street projects. Roughly $96,000 will go towards debt service on an old street project we're paying off. Another almost $1.2 million will be spent on sidewalks, street projects within the community, trails, etc., LED lights, street lights. And roughly we get another $900,000 to $1 million in gas tax dollars that will go towards other street improvement projects. We'll probably spend in the range of $3 to $4 million this year on street projects within the community. Again, if there's any questions as I'm going, please fire away too. Fund balance wise, we strive to have 42 to 48% of our expenses in fund balance, the rainy day fund. Most of that is because we don't get our state aid, that $8 million of LGA. We don't get that till July and December. We get it in 2 installments. Our property taxes usually come in June, July, and November also. So for the first 6 months of the year, we have very little cash flow coming in to fund the operational costs, which is why at year end on December 31st, you want to have fund balance. At the end of 2015, we were actually over that 48% level, but we knew in 2016 we'd have to make some transfers for some capital projects and some continuing losses in the health insurance fund, which we hope we've got kind of figured out going forward. Finally, last on that cover letter, we talk about the salary increase. We've got 3% factored in or estimated for all contracts. We've got 8 bargaining groups. I believe we've got 3 settled. So anything above, any settlements above that 3% rate is not budgeted for at this point in time. Next, I'd like to actually get into the PowerPoint presentation, which is what most of you should have for the slides. If we looked at the agenda, here's just kind of a breakdown of what we will talk about tonight. Budget timeline, as you can see, we actually started this process in June with council and the mayor and city council to discuss what are your budget parameters, what projects are you looking at doing, anything new, what do you want to do for 17? And the direction given to us was essentially we want to make sure we're doing the same stuff in 17 that we're doing in 16. So those budget parameters let us know the programs, the projects, the arenas, the libraries, whatever we got open. Council's given us direction. They want to keep those into the 2017 year. There's a different list of meetings, dates we had to go through the proposed budget, meeting with department heads, meeting with citizens that had questions, concerns. Culminates now on December 6th tonight to the required truth and taxation hearing. If everything goes as planned tonight, on December 19th, our next regular council meeting, the council will have to pass a budget and tax levy, which will then be transmitted to the state of Minnesota and Moore County, which then generates your actual tax statement that you will receive in probably April. 2017 proposed tax levy compared to 16, again $5,341,000 versus the $4.9 million it was in 2016. Here you can see the different areas where your tax levy goes. Again, the general fund is primarily police, fire, streets, highways, administration. The library gets roughly $923,000 of that tax levy to help operate our public library. The Port Authority, which is our economic development arm, gets $40,000 of that levy each year for their purposes. We got about $94,000 in tax levy going towards debt service on the Old Street project. And then the $1,163,400 is for those street projects, trails, LED lighting, etc. Here's your tax dollar. So on the tax statement you get, this is based on the 2016 taxes. 38% of that payment you made to Moore County came to the city of Austin. 37% went to the county, 23% went to the school, and then the other 2% went to like a watershed or a recycling fee, etc. HRA is probably also in there. Employees by department. Here you can see the list of and the proposed 0.5 FTE increase in public safety for the fire department. So here it gives you a little list or a concise list over the last couple of years of employees by department or by area within the city of Austin. Again, 7% of that 9% increase is going towards paying these people when you look at your tax levy. Proposed revenue sources for 2017. I like to put this graph in here mainly to show that kind of grayish bar, the second bar from the left. Intergovernmental revenue, that is $8 million of LGA, state aid, plus some other fire state aid, police state aid, etc. But of that $9 million, 8 of it's LGA. So again, we are very dependent on the state of Minnesota to continue the local government aid program to keep our taxes at the rate they are and the services at the rate they are. Overall budget revenues, just under $31.3 million. Again, taxes, $5,341,000. Intergovernmental revenue of just under $9.1 million. And again, most of that, $8 million, is LGA. The other big line item there, miscellaneous, $3.1 million. A lot of that is the payment in lieu of tax the Austin Utilities gives us. They don't pay a property tax as a utility system. They pay us a fee based on usage so that we can keep the dollars down. We also have contributions factored in there from grants, Hormel Foundation, et cetera, state grants, and then the use of some fund balance. Down at the bottom half, enterprise funds, $6,872,000. That's primarily our sewer charges. So you get your utility bill each month, you pay your sewer fee. No property taxes go into the sewer system. That revenue source is supposed to support the operations of the sewer department plus capital that goes into it. Then finally, other big line item there, internal service funds, just under $5 million. This is where we pool cash from other departments to, let's say, buy a new fire truck. We might buy a new fire truck every 10 years or 15 years to replace one in the fleet. Each year we put a little money aside so that in the 15th year we have cash to buy that. It also handles our insurance, workers' comp insurance, our property liability insurance, our sick leave program for employees when they retire. That's what makes up the roughly $3 million of revenues. On the expenses side, they mirror, enterprise and internal service funds will mirror what the revenues are. And then the general governmental services is all other, mainly the general fund operations. Proposed tax levy by fund, 58% of that $5 million plus tax levy goes towards the general fund, again, to fund operational costs of the city, police, fire, street, highways, etc. 22% goes towards capital improvements, again, the street projects, LED lighting when it's trails. Library gets 17% of your tax levy, and then debt service, 2%. Again, that's just paying off an old bond issue. Unfortunately, this next graph continues to rise. If you look at 2008 through 2017, this is a tax levy we're spreading amongst the citizens. In prior years, if you look back at the early 2000s, it probably stayed stagnant. But how did the city flow operations based on no increased taxes? Back in those days, we were getting significant amounts of LGA increases. So the council said, we don't need to raise taxes on you because the state's giving us additional state aid dollars. And that's what we used for cost of living raises, street projects, et cetera. But as you can see, as the rate keeps going up, there's been some freezing or only minor increase in the state aid to us. So we've had to come up with other operational sources to fund differences. General fund expenditures, this is by far, again, the largest department or largest fund within the city, just under $16 million of expenditures. You can see the public safety, $6.4 million. That's 40% of our general fund budget. That's primarily police and fire. Streets and highways makes up another $3.7 million, which is roughly 23% of that budget. And park and rec at $2.7 million of costs is about 17% of the budget. 80% of our costs are in those three lines. Then here is just a breakdown of each one of those main categories. So general administration, we have the mayor and city council. One of the big lines is finance and our computer department. Human resources, the prosecuting attorney. These are all costs related to just the general administration line that'll add up to $2.1 million. Public safety, again, 40% of our budget, $6.4 million. Most of that, as you can see, goes to the police department. And I think the police department over the years has been the one department that has seen staffing increases because of some of the issues and situations that have come forward to council. Streets and highways, about $3.7 million worth of cost. Takes money and dollars to plow streets, to pay for the streets improvements, the maintenance program on it. You know, we've been beneficial the last couple of years. Gas prices have been down, so we've been able to stretch that dollar longer. And then Park and Rec, $2.7 million. You can see the line item, the major line item costs associated with each department within the Parks and Recs as to where they're spending their dollars. Nature Center, arenas, just the park maintenance alone is over $800,000 worth of costs. Pool, for example, $164,000 worth of costs. We probably have revenues to the tune of about $80,000 to help cover that. The rest is a tax levy. We provide a pool for the citizens, and knowing full well we can't recoup dollar for dollar all those costs. But as a charter, that's our requirement, is we have to provide recreational services to the citizens. Another general, right now your contingency, which is our rainy day fund for 2017. Things that come up that we know are going to happen, or we don't know are going to happen, but always come up. Council's got $125,000 set aside out of a $31 million budget for things that come up that they just haven't planned for. Historically, that number's at $150. Sorry, we just couldn't get that up to $150 this year because of the other projects, the other things going on. Then capital outlay of $621 grand. That covers things anywhere from police vehicles. We get 2 to 3 new vehicles every year. Playground equipment that's old, needs to be replaced. Things like that go into there. Again, that's your main operating fund of the City of Austin. On our website, we do have more detail as to all the line items, the different departments, and what makes that up, if anybody would like to take a look at that. Now we get into just some of the other operating funds of the city. This is a recreation programs fund run through Park and Rec. It takes no tax levy, no tax support whatsoever. These are self-supportive based on programs that clubs, etc., use Park and Rec software or scheduling software in order to get the thing done. So again, no cost to the taxpayers. The library fund, 80% of the library's fund is your tax levy, $923,000. In addition to that, we've requested roughly $175,000 from Moore County. They tax just those citizens within the county that do not have access to a library within their town as part of their tax levy. So on your tax statement, you'll see Moore County as a tax levy on there. They're not charging you for the library because you have access in Austin. Police PERA fund. Back in the late 90s, the City of Austin had a police retirement benefit account and a fire retirement benefit account that were handled locally. At that time, the state of Minnesota requested we merge those in, along with about 42 other entities, into the state's PERA retirement system. They did an actuarial evaluation and said, the dollars above what we need, we're going to give back to you, city. But you have to use those excess police dollars and those excess fire dollars for police or fire services. So what the council has done is use, they roughly amount to about $1.1 million each in '99. This council has used those, instead of increasing the tax levy, to pay for improvements. For the police department, for example, a couple years ago, the law enforcement center was remodeled between the city and the county. The city's share, we didn't have to spread a tax on anybody. Council decided to use some of that money to pay for that. Right now, this is your last $60,000. You've used it all up. Once this is done, you will no longer have any police PERA money. And in 2017, they're proposing to use those dollars for new tasers, pay for the canine dog, and some weapons boxes for the police vehicles. I think council's talked to you about the tasers, the age of them, cartridges, etc., which is why they're looking at replacing them. But again, after this year, after 17, there will be no money left. Fire PERA fund, same thing, only they still have dollars available. I think it's like $300,000 to $400,000 at this point in time. We should get about $5 grand of interest earnings on that. And for the fire department, the projects of the capital outlay, they're in the middle of some facility upgrades at the fire station. Last couple of years, we had to redo the roof. We had to reseal, recaulk the sides of the concrete panels at the fire station. And now in 16, we're replacing some of the furniture, or some of the kitchen equipment. And then in 2017, the training room needs to be fixed up. So again, they're kind of using their dollars slowly over the years to upgrade or fix the fire station, because it's been probably 20, 30 years since they've really done any of that at the fire station. And again, those are dollars that come from that PERA fund, which means they don't need to use tax levy. We don't need to increase the taxes from the citizens to help pay for those things. Economic Development Fund, just a small pot of state cash that we received many, many years ago. These are the different entities paying the loans back to us. It doesn't amount to a whole lot, but we still have to budget for it. Debt service funds. These are, again, the street project that's remaining. On the right side, special assessment debt service, the 2004B bonds. Those should be paid off in 3 years, I believe. Again, debt was issued back in '04 to pay for street projects. We don't do that anymore. We use a revolving pool of cash, so we don't have to pay bond attorneys, financial advisors, anywhere from 50 to 100 grand to allow us to issue this debt. Tax increment debt service, there's only one bond remaining out there, a 2009A bond that'll be out there for several years. Tax increment districts are in essence businesses throughout the community, and this one remaining is a downtown district where 100% of their taxes come to the city of Austin. We used bond proceeds many years ago to fix up some of those areas, so now we capture the tax just off those businesses to pay the bonds back off. And in addition to that, we have some redevelopment agreements that past councils have agreed to. For example, Whittier Place Townhomes, Murphy's Creek Townhomes, where we agreed back then to give them some of their taxes back because they invested in the infrastructure, the dirt, the streets, to put the project out there to help for some housing developments. Capital improvement revolving. Again, this is $1,163,000 of your tax levy is going towards these projects. A lot of it, as you can see, are street projects. There is some a dam portage proposed for 2017 right outside City Hall here. Some sidewalk alley repairs. Again, sidewalks and alleys are a continual cost to the city of Austin. As we receive complaints, trip and fall complaints, we have to go out and fix those. We have to change sidewalks up, ADA requirements on corner lots. And those costs only continue to climb for us, and we're required to do it. Otherwise, our insurance company gets hit with it, and then we really have to pay. Then we're finally getting to some of those enterprise funds. Again, these are self-supporting funds. No tax levies go into these. The sewer user fund, each month you pay your utility bill. Part of those dollars, Austin Utilities sends us then to help pay for the sewer system. Dedicated employees work on the sewer system. Some of the dollars go towards capital improvements in the sewer system. As council has noted in our capital improvement program, however, depending on how the permit process goes and state requirements, you could be looking at some large increases in the next X years to help pay for some of those projects if they do come down the line, phosphorus reduction, some of them other things. So I think staff has taken a keen eye in watching those and working with the coalition of Greater Minnesota cities to make sure those mandates aren't overly onerous on us. Part of the treatment plan also, you can see the industrial revenues, $2,039,000. That's entirely Hormel. Hormel pays for roughly half of the treatment plant expenditures, whereas you citizens and any other business pays for the domestic side. We have a dedicated billing to Hormel on a monthly basis based on those costs. Waste transfer station out by the airport. As you can see, 6,000 transfer station rental. That's revenue coming in from waste management. Yet we spend about $84,000 a year. Used to be we rented the transfer station to waste management and we could make those revenues expenses pretty much balance. But the last couple of years, Waste Management has not been willing to pay more than $500 a month towards it. Good news is we have cash in the bank to help cover those losses. The bad news is you can't do that forever. At some point in time, a decision will have to be made. What can we do differently with the revenue stream? Is it that important to the citizens to have a transfer station? I mean, if you've been there on a Saturday morning, you'd probably say it's pretty important, because we certainly don't want that stuff dumped in our ditches. But again, it might come to the point in time when there's no cash that council, you might have to increase taxes $76,000, $77,000 a year if you want to keep the transfer station open, because there's just not enough revenue coming in to do that. In fact, we've delayed some capital improvements out there because we kind of want to get into a long-term relationship with Waste Management or some garbage company before we make improvements at the facility. So again, council, you're going to have to watch this, because down the road you might have to make a decision on that and funding it with tax dollars. Then the Stormwater Utility District, this is a billing that comes on your utility statement every month. In essence, there's a requirement in the state that the water that enters town has to leave cleaner than it entered it. So these dollars are used towards that process. There's dedicated staff towards it, and there's also staff that are shared between this and the treatment plant, so that it's not all one cost for those. A lot of this, $445,000, are capital improvements that are being proposed in 2017, including some storm ponds, some storm sewer upgrades, and some tile line installation. Port Authority is our economic development arm. Craig Clark is the executive director, and 2 council members, none of which are here, are on the 7-member board. We in essence have 2 buildings at this point in time because we've sold the rest of them off. The Walker building, we get lease payments from International Paper. And then the Hormel Institute expansion, that is actually the City of Austin Port Authority's building, because we receive state bonding monies for it. Between the state monies and the Hormel Foundation grants, that pays for 100% of the capital costs. And we lease it back to the Hormel Foundation, where they run all the operations out. So it doesn't cost you anything, it's just we have to keep it on our books because of that state grant. The Hormel Institute project, the first expansion, we actually issued debt for that project. The last payment is made February 1st of 17. Then the Hormel Institute debt service is gone. We no longer have any debt service on that first phase. We don't own the first phase. We just issued debt to help them finance it, because we could get a lower rate than they could on the financing side. The general fund, that's the Port Authority's dollars to use for economic development. Again, 40 grand of it comes from property taxes. Those are the dollars they use, whether it be for consultants or for studies or for actual dollars being used to improve some of the properties within the Austin area. Then finally, the Walker building, proposing to take in roughly 88 grand in rent out there from International Paper. We have to pay property taxes, some building maintenance on it, which leaves, projected to leave about 60 grand in 2017. In the past, what does the Port Authority use those monies for? That actually helped buy the Oak Park Mall project for that improvement. Those dollars helped buy the Robinson building, which eventually was traded to allow for the Spam Museum to go downtown to help with downtown development. So again, they use those dollars for other capital projects or other projects within the community to help with economic growth. And then finally, we have our internal service funds. Again, these are just funds that are charged to each department, excuse me, and then pooled in here so we can make the final payments out. Streets, Parks and Recs, this is again where we pay for our maintenance folk, but we also pool dollars up, so when we need to buy a new dump truck for a couple $100,000, we have cash in the bank to do it. We don't have to borrow money for it. Each year we spend roughly $450,000 to $500,000 in the street department for new trucks. For example, in 2017, we specifically have budgeted about 175 grand for a plow truck that will replace one that's 16 years old. So we try to get more than an 8-year useful life out of a lot of these trucks. And then on the pickup side, if we're buying pickups, we try to recycle them down to lower users. Park and Rec has roughly $130,000 set aside for some capital items, a Tiger mower and a logging truck. Computer replacement. Annually we set aside 20 grand for new computers. We recycle, high-end users get new ones, their computers then get recycled down to lower-end users. And in the old days, the older ones got sent to the Youth Activity Center where they died a slow death. Since the Youth Activity Center is no longer there, we're trying to get more usage or more life out of our computers, but that's how our process works, so that we're not replacing all the computers at once. Every 6-7 years we have to buy a new server, but we did that in 16, so we've got no needs for that in the 2017 year. Then fire fleet replacement. Again, dollars we set aside on an annual basis into this fund so that when we do want to buy a fire truck, we have the money sitting there. It evens out cash flows. In 2017, Chief McCoy is proposing to buy truck number 309, utility truck 309 that will replace a 2001 for roughly 45 grand. After that's bought, there should be several years, at least 3 to 4 years, of no fire truck purchases, because as you recall, we bought one in 16 also. The fund needs time to pool back up, and there's no equipment that's scheduled for replacement in the next couple of years in our capital improvement program. So again, these dollars will then just start pooling up until we purchase another fire truck. And then finally, our risk management fund. Again, this is where we pool dollars from other departments so we have enough cash to make payments. About $1.6 million being set aside for health insurance. Another roughly $282,000 for our property liability insurance. Our workers' comp is skyrocketing at $484 grand. This is literally hundreds of thousands of dollars more than we paid 5-6 years ago. We've had some issues, we've had some bad ratings, and they usually stick with you for about 3 years. So I anticipate even next year that in 18 that number will be high before hopefully it'll start falling back again to the old days. Then sick leave program, roughly 200 grand set aside. As our employees retire, if they have not used their sick leave by union contract, we're required to pay it back to them, pay it out to them upon retirement. So we have dollars we set aside on an annual basis so that when an employee retires, we can make that payment and don't have to use tax levy dollars or any increases there to pay for it. In a nutshell, that is your operating budget for 2017. I'm going to go to the tax statements first. Some of you actually have brought your tax statements in. I gave council some samples of ones that we received at the city or from employees, etc. We whited out the names to keep the innocent unknown. If you looked at like 14-1, the first tax statement, for this, and again, I'm only concerned with the city line, not city, county, school. City line went up roughly 10%. But if you look at the top of their tax statement, the valuation went up 16.2%, top right corner. As I explained to a couple citizens that were here that had large increases in their overall taxes, both of them were because that valuation went up. Here in this one, the actual valuation went down 16%, which showed their statement, their city taxes went down 10%. On the next one, the valuation went up roughly 10% from 64 grand to 70 grand. The city taxes went up 18%. Whoa, wait a minute. We only raised taxes 9%. How could it go up 18? That other 9% is because your valuation went up. As the value goes up, your taxes will go up higher than the average person. 14.3, the same result. Now here's one where the valuation did not increase. It was $156,100 in both payable 16 and 17. This is a good one to take a look at. What did the city's tax levy really go up? As you can see, 7.22%. So when valuation doesn't change, here's what our 9% levy increase, how it hit a citizen who didn't have a value increase in their property. Same with this house here, 257. Value stayed the same in both 16 and 17. What did the actual taxes go up? 7.22%. So even though you raised the levy 9, only 7.2 actually hit your tax statement. Then here's a commercial building. This is the Walker building the Port Authority actually owns. Again, value stayed the same. What did the taxes go up? 7.2% on the city. That gives us confidence that that growth was really 1.78% based on what we're actually seeing here. Now, the only other thing I need to discuss tonight, unless there's questions from the citizens or the council, is there's proposed resolutions, and I have an error in the addition of one. Figure that a math guy didn't add up right. But the proposed resolution for the tax levy, the numbers actually add up to $5,341,000. So if council is, after we have the public hearing, citizens have to have a chance to ask questions or speak. If there are no questions, then we'd ask council to actually pass a tax levy, recommend to the council at the next meeting a tax levy amount. The next one is the proposed budget for 2017. We'd ask you to recommend that to council. And then the last resolution is a resolution where you have the right, because of bond issues, to levy an additional tax on the citizens to the tune of about $1,500,000, $1,600,000. That would increase your taxes even further. But council has different revenue sources to actually pay for that debt service. So we actually have to pass a resolution saying, no, we're not going to pass that tax on the citizens, otherwise the county might think we need to do that. So the third one is to say we don't need to tax these dollars onto the citizens of Austin. And then the last one is just 15-1, just the state's rate. The state determines the tax rates for all classes of property, not the city of Austin, not Moore County. Moore County determines the value of your property, but once the value is determined, then this is what the state uses to determine how you should be taxed, whether you're homestead, commercial, farm, whatever it might be. So Mayor, that's all I have to discuss or present at this point in time. Would like to open it up for your questions, citizens' questions, Chamber of Commerce, is there any questions they may have? Because again, it is a public hearing.
Council, do you have any questions?
We've gone over all of this really carefully, so we're interested if there are citizens or other questions.
That's not a question.
No, it's not. I'm just saying that we've all gone through this carefully so that we...
So you don't have a
I
question?
don't have a question.
All right. Citizens, any questions by the people that have come here?
And the two of the citizens, Gary, I didn't ask, see you ahead of time, but two of the citizens had valuation increases in their property, which jacked up the tax levies. And I urged them to, talk to the assessor. One of them's already talked to him, so.
Talk to me after the meeting. My taxes went from $800 to $2,400 this year.
You built the house.
Bad boy.
You-
Same place as it was before.
Yeah, but it's dirt versus a house.
I'm going to go down there and ask some questions. No, that's fine. That's it bites everybody, I guess. But yeah, if I would have known you guys were going to do that to me, I might not have built that house.
Put a paper shed out there.
All right. Is there any questions from the audience? Or if you want to make a statement, if you're unhappy or happy about it? I mean, nobody's happy about taxes, not even me, obviously. Okay, and the next step then?
Next step, then, I'd request three separate motions recommending A, the tax levy, B, the budget, and C, cancel
Why don't you give them to us
taxes.
one at a time?
Okay, the first one would be approving the tax levy for 2017 at $5,341,000.
Do I have a motion? Is there a second?
Second.
All in favor?
Aye.
Opposed? All right, number two?
Next one would be the budget, setting it at $31,252,900.
So moved.
Is there a second? Second. All in favor?
Aye.
Opposed?
And the last one would be to cancel taxes to the tune of those two projects, one for $247,000, one for $1,280,000, so that we do not levy these onto the citizenry.
Is there a motion?
So moved.
Is there a second? All in favor?
Aye.
Opposed? Okay.
Okay, the only other thing I have to say is this proposed budget, again, and tax levies will be adopted at the December 19th meeting at 5:30. Otherwise, Mayor, that's all the requirements you have for the state statutes.
Okay, I just want to tell, the media and stuff, and thank the council. Council worked hard, very hard on this budget. That's probably our number one thing. We say and we tell people our taxes are low, and comparatively speaking, they are. But when we think about raising taxes, I don't think about the people living in the expensive houses. We think about the old retired people that can't afford anything, and our taxes are not low to them. It's a relative thing. So I want to thank council for working very hard on this budget. Tom, I want to thank you, and I want to thank the citizens that came here to learn a little bit more about it. Okay? And next?
I just need a motion to close the meeting.
Anybody have anything to say before we close? Anybody that came? All right. Anybody, council? Okay, need a motion to adjourn.
Make a motion.
Second. All in favor?
Aye.
Opposed? All right, thank you, Tom. Thank everybody for coming.